Welcome to America's Commercial Real Estate Show, your source for intel, forecasts, and success strategies. Hello, I'm Michael Bull. We sure appreciate you being with us. And we have a cool show for you today. This segment's brought to you by Bull Realty Asset and Occupancy Solutions. Visit bullrealty.com. Today we're going to talk about investing in real estate with a self-directed IRA. And, you know, this is something I think a lot of people have heard something about, but I don't think near enough people are looking into it. So we're going to talk about some of the advantages, why you might want to do it, how to handle, how to do it correctly so that it's something that you can consider. And I think it's really important for people who maybe have a lot of money in the stock market. Maybe the stock market's run up and you want to diversify and maybe get some of your money into a self-directed IRA to invest in real estate. So we'll talk about that today. Please welcome my first guest. It's Jason Craig, and Jason is with IRA Resources, and he's joining us on the phone. Jason, thanks for being with us.
Hi, Michael. Thank you for having me.
Well, Jason,
happy to be a part of the show.
Well, thank you. And to start us out, Jason, just briefly, you know, what are the benefits of just a self-directed IRA, you know, as far as tax reasons to go in and out of it and some of the basics?
Self-directed IRAs are beneficial for people because it allows for asset diversification. Most people think retirement, you think IRA, you think 401k, you think stock market, publicly traded assets. And a self-directed IRA or truly self-directed IRA allows for alternative assets like real estate, whether that be commercial, residential. You can do fund investing, you can do loans, lending. It allows for people to invest in other things other than the stock market. And one of the things that we see a lot is people invest in what they know. So if somebody is comfortable investing in real estate, a self-directed IRA is another way to do that using funds that people think have to be locked up in the stock market.
Okay, and so you can invest in real estate with pre-tax dollars?
That's correct, yes. If it's a traditional IRA, it's pre-tax. If it's Roth IRA, it's post-tax, but then all the gains are tax-free.
Okay, and how much can you put in a self-directed IRA? What are the limits?
The annual contribution limit is $5,500 unless you are eligible for a catch-up contribution, which is an additional $1,000 that you can do. If you see a lot of our clients are rolling over old 401ks, which usually have larger dollar amounts than the annual contribution limit.
Right, and that's what I think it makes sense. So a lot of our listeners are going to be involved in commercial real estate, so a fairly high dollar compared to maybe some investments that you can make. But there's a lot of people out there, right, that have retirement accounts have sizable amounts of money in them that are all in public stocks, right?
That's correct, yes. There's a little over $7 trillion in IRAs. About 4% of that is in self-directed. So to your point earlier, the self-directed IRA has been around since 1975 as far as what you can invest in. A lot of people just don't know about it.
Yeah. So let's talk about that, Jason. What kind of properties can you invest in, or maybe it's better said, what can you not invest in?
Yeah, the IRS takes the approach what you can invest in. So there's only a couple things: life insurance contracts. You can't do collectibles, wines, artwork, those kinds of things. And you can't do self-dealing. Anything other than that is available for investment. So we do have clients that have invested in strip malls, office buildings, apartment buildings. Obviously, single-family homes is another large one as far as real estate goes. But again, you can invest in almost anything other than the couple things that I mentioned. So it's almost limited to your own creativity. We see a lot of people doing a lot of different things. But
right.
Real estate is the most popular.
Right. And so let's talk about self-dealing for a moment, make sure that's clear. So we can't put a vacation home in a self-directed IRA or property that even we're going to use to maybe run our business in.
That's correct, yes. So that would be considered a prohibited transaction. You can't buy a house and then live in it. You can't rent it to what's called a disqualified person, and a disqualified person is a spouse or a family member, ascendant or descendant. So parent, grandparent, child, grandchild. You can't rent it to them. You can, the IRS doesn't limit this, you can rent it to siblings, though. So if you have your brother and they wanted to go into the house, they can definitely do that, but you can't do any other type of family member.
I would never rent to my brother. No, I'm just kidding. Okay, so you can't buy it for something you're going to use for your business, for your home. What about 1031. So if you're selling a property and you're doing a 1031, can you 1031 into a self-directed IRA property?
No, because the property is obviously outside of the IRA when you're bringing it into the 1031, and a property that's already owned by the IRA doesn't need a 1031 because it's already in the tax-deferred state,
okay,
as we discussed earlier with the traditional IRA, so you wouldn't need to use it at that point in time.
Okay, and you can't put a property in a self-directed IRA that you already own, right?
That's correct, right. It would have to be a new purchase, and you can't do that purchase again from the disqualified person. So you can't take your personal residence or you can't take a commercial building that you own and put it into the IRA. That would be considered a contribution, and the only thing you can contribute to an IRA is cash.
Okay, all right. Now, what if you have the opportunity to join a general partner and you want to be a limited partner and invest, say, $100,000 into a project that maybe I'm the general partner and I'm buying it? Can somebody come in as a limited partner and say invest $100,000 in my deal inside a self-directed IRA?
Definitely, and we see that a lot with our clients. They will do the entity-type investment. That way they can leverage multiple people coming in and making the investment to either buy more properties or larger properties. And what your IRA would own at that point in time is a percentage of the limited partner that then turns around and invests in the property. But you can definitely do that. We have a lot of clients doing that on a daily basis.
Right, and there's a couple rules we're going to talk about that might make that a pretty good idea to do it that way. And one of those rules, Jason, is that if you have to fund, so you buy a property, you put it in your self-directed IRA, and then that property needs some money, some investment, some repairs and improvements, you have to use money from the IRA for that. Is that correct?
That is correct, yes. Anything that the IRA owns, the IRA has to pay for. So all income, all expenses would flow in and out of the IRA. You can't use your personal funds to cover those expenses.
Right. So that's what one of the reasons I would think vested as a limited partner, because you might, in a limited partnership, might just be only limited to what you've invested and not have to put any more funds into it. So it makes that a perfect vehicle, I would think.
Definitely, and that's one of the advantages of why people do it that way is they can invest that certain amount of dollars in there, they own the percentage, and then their commitment to that is done, as opposed to the ongoing upkeep potentially.
Okay. Now, talk to us about a custodian, because you have to have a custodian to invest in real estate with a self-directed IRA, right?
That is correct, right? So you have to have a custodian that's willing to allow the alternative assets. And again, the IRS doesn't say what you can do, they say what you can't do. Most companies, whether it be your brokerage houses, limit what you can invest in, and typically that's done to stuff that they sell or make a commission on, or it's publicly traded. So you're allowed to invest in anything that you want other than the collectibles, the life insurance contracts, and doing any self-dealing, as long as the custodian doesn't make a business decision to limit it. So a custodian, even in the alternative asset space or the self-directed space, may say, for example, I don't want to do single-member LLCs. They have the business decision and the ability to do that. They just wouldn't accept those.
Okay.
Any other ones in the space that want to take all those can, and that's what we do.
Okay, so let's give an example, Jason. So let's say that a listener wants to invest $100,000 in my next project that I'm buying, and they're going to be a limited partner. They're only going to put in $100K. That's the limit to their liability. So what would they do next? What would they do?
They would work with us to establish an account. Once we have the account open and the number assigned, we work with them to transfer the funds from their current custodial provider. Once those funds come into the account, then they tell us what they would like to invest in. So in your example of being a limited partner, they would fill out what we call a bi-direction letter instructing us to purchase $100,000 worth of this limited partnership. The IRA is going to be the limited partner. We would wire that money to the investment provider, and then from there we show the IRA owns $100,000 of this limited partnership.
Okay, perfect. It sounds real simple. So what are the costs involved in doing all of that, roughly?
For us, we charge on an asset basis. So it doesn't matter if the account is worth $5 or $50 million. It's $199 a year to have the account with the asset in it. The buy fee for a private placement, in your example, to a limited partnership is $50. That's a one-time fee. And then there's a funding fee of $30 for a wire or check fee of $7.
Mm-hmm. Wow, that sounds extremely reasonable.
That's our goal, to have it be affordable.
Yeah.
Make it easy and make it affordable is what we try to do.
Yeah, it's incredible that the amount of people that I think are that have a large sum of money, and it's all in the stock market or whatever. The interesting thing about the stock market is there's some stocks that can drop heavily, right? Some can go down to zero. So, real estate, just even the worst of times, not going to go down to zero. Let's talk about debt. So if someone's buying a property, do they have to put all cash? Can they put some debt on it, on a property inside their self-directed IRA?
That's a great question. No, you don't have to pay all cash. There's a couple different options, and one that you just mentioned is debt, which would be a non-recourse loan. So the difference with the IRA component being involved, or the owner of the property, is there can't be any recourse to the IRA owner. So the bank is underwriting the property and the ability to cash flow that property through what's called a non-recourse loan. And that is something that we do have a lot of clients do because it allows them to leverage the IRA for either more purchase power or to buy multiple properties.
Okay, so you can have debt inside the self-directed IRA, but I guess you got to pay all the loan costs, all the debt costs, all inside the self-directed IRA, and you cannot have any personal liability.
That is correct, yes.
Now, a lot of loans have what you call bad boy carve-outs, where it isn't a sculpatory loan. There's no personal guarantee on it. But if you do something, if you're a bad boy and do something wrong, they can come after you. So I guess that's okay.
Yes, that would be a little bit different. In the non-recourse loan world, it's going to be more of a prohibited transaction as far as what that goes, because, again, they're not underwriting the person. Mm-hmm. Their credit isn't part of the decision that goes into whether or not they do the house or the commercial property. The loan-to-value is going to be what they're looking at, the ability to cash flow, the debt service ratio, and then the reserves that the IRA has.
Okay. Let's talk about another alternative, Jason, that you might want to consider doing inside of a self-directed IRA, and that is creating a note, lending money, or buying a note, right?
That is correct, yes. We have a lot of people that do that. They want the benefit of real estate, but maybe they don't want to actually own the property and have the upkeep and the maintenance. So the IRA can be the bank, essentially. You can turn around and the IRA can loan money, whether it be for a down payment or a full purchase, and then they have a note from the borrower, usually secured by the property itself, where the IRA gets monthly payments just as you would pay a bank.
Interesting. And that the borrower obviously could be personally guaranteeing that, because that's not the
borrower can be, yes.
Right.
That's correct.
Right.
Yep,
So,
definitely.
Yeah, so that's interesting. So someone could say, hey, Michael, I'm going to let you borrow $1 million at 4%. Wait, it's for Michael, 3%.
You get the special deal.
A special deal for Michael Bull, right? And they could put that right from their self-directed IRA. Now they've got a set income. They've got a personal guarantee from somebody with good credit, and they have the guarantee or the collateral of the real estate if that note is collateralized by a property, right?
That is correct. And again, the terms of the note, as you kind of were going through and describing how you got a special deal, would be between the borrower and the IRA owner.
Right.
We don't have any say in that. We don't tell them what they need to do. They work on those terms themselves, and then they would send the payments back to the IRA.
Yeah, okay. That's interesting, very interesting. And so, Jason, why aren't more people doing this? Or does it seem like there's a lot of people that just aren't diversifying, that aren't taking advantage of this?
I think the answer can be summed up. The biggest challenge we have is also our best opportunity. It's just getting the word out there. Mm-hmm. Again, a lot of people don't know that the opportunity exists because when they're dealing with their retirement accounts or they've left a 401k and they're rolling that over, usually there's an arrangement with the big brokerage houses, the Schwabs, the Fidelities, and those types of places don't offer the self-directed IRA. So a lot of people don't know about it. We don't have the marketing dollars and the budgets that those big companies do to spread the word. But if we did, then we would be able to get the word out there more, and I think more people would take advantage of it. It's one of the interesting things when I get to tell people what I do and have a conversation, they're really surprised because they've never heard of it before. Yeah. But once they understand it and we take the time to educate them, they see all the benefits to it, and they like the opportunity to invest in what they know, and that's where they move over the money and move forward.
Yeah, I mean, it seems like a good way to diversify and have some safety inside it, and also have something that inflation really creates a nice benefit for you.
Definitely. And, from our perspective in tracking some of our numbers, our real estate purchases are up almost 23% this year. And to your question earlier about the IRA being the lender or the bank, our deed of trust, or where the IRA is the lender is almost up 50% over last year. So the word is getting out, and the opportunity to invest in real estate is one that's always been really popular, and that's continuing in 2017.
And is there anything that tends to make folks nervous that you talk to that maybe shy away from doing it?
Nothing that makes them nervous once they understand. The biggest thing that we get are the questions is usually, I've never heard of it before, but how does it work? Or why haven't I been able to do this through Schwab or my brokerage house, or why hasn't my advisor told me how to do it? It's taken the time to educate them, let them understand how it works, telling them what they can and can't do, answering all their questions. Once they get their arms wrapped around that piece, they want to move forward because they think it's a great deal. Because people want to invest in what they know. To your point earlier about the stock market, stock could go up and then drop the next day. You have no control over that. But you get the ability to pick out the piece of commercial real estate that you want to purchase, or who you want to have be the limited partner in the deal that you're trying to fund. They like the comfort of knowing those aspects of the deal. It's just learning the IRA rules around it.
Yeah. Well, that makes sense. And you think about we all have experienced price increases on everything that we buy, from gas to milk to real estate. And I think you turn around and you've got money in your account, and if you think you won't use that for 20 years or something like that, you can imagine the benefits of inflation on that real estate sitting inside that self-directed IRA.
Exactly. And the other benefit, too, is I think everybody can relate to real estate, right? Like all the things that you just said are very true, but also people always need a place to live or a place to work. So it's something that they're comfortable with. It's something that they're used to. It's something that they are a part of on a daily basis, whether it be going to work or going back home. Why not leverage that for the benefit of an investment as well?
Right. And Jason, can you have a property inside your self-directed IRA? You think it's a good time to sell it. Can you sell that property and have the cash back in your IRA? Can you sell that property and put the cash in there and then use that cash and buy another property inside the self-directed?
Definitely you can. That's a great question. So we will have people that will buy a property, like you just said, wait for a certain amount of time, or they'll collect rent and it's cash flowing, turn around and sell it. The money all comes back to the IRA. Again, you don't need a 1031. The money sits there until you've decided what you want to do with it next. You could turn around and buy a couple different properties or buy another one whenever you want.
Yeah, and I guess one of the big things that you'd want to watch out for is if you're tight. So if you've got $1 million in there and you buy $1 million property, and that property needs some cash for something, I guess you have to be careful there and make sure that you have some cushion, because the money that's going into any kind of repairs, improvements, leasing commissions, things like that will need to come out of your self-directed IRA, right?
That's correct, yes. So if somebody used, in your example, the full amount of money that they had in their self-directed IRA, and there were expenses that need to be paid for, they would either have to transfer from a different IRA, let's say at a brokerage house. They could make an annual contribution like we discussed earlier, or another potential option would be to sell part of the property to another investor and then bring that money in, and then they would have money and then split the expenses going forward.
It's always a way to figure things out, right?
Definitely, yes.
Well, Jason, great information. It's good to talk to you, and thanks for being on the show.
Hey, thank you very much. I appreciate it.
If you'd like more information from Jason, visit their website. It's IRAResources.com, and we'll put a link on our show website at CREshow.com. Stay tuned. We'll have more on investing in commercial real estate. I'm Michael Bull. This is America's Commercial Real Estate Show.